Welcome back to the IB Investor channel. In this video, we'll take a look at the most recent earnings report from New Wave, which is one of the most talked about stocks on Twitter and other social platforms. In this video, we'll cover the cash flows, we'll check the debt situation, and also see if there's any short situation for the stock. I can also mention as some trivia that this company is owned and founded by Torsten Jansson, who's still the CEO here on the left picture. And it's also owned by the famous investment company Svolder that holds roughly 7.8% of the capital and 2.1% of the vote interest. Let's just take a quick look at the share price before going into the financials of the company. We can see that the company has done very well for itself, returning almost 2,000% over this period from the 90s up until now. And do remember that this is not including dividends. So with dividends reinvested, the stock return would have been much higher compared to these 2,000%. However, it is a cyclical stock. We can see that it had periods of big drawdowns. So here in the most recent financial crisis, it went down in 2008, 2009, all the way here to the bottom. But the stock has covered since then and has recovered quite nicely, I would say. And here during this period after during the COVID years, it received a lot of attention from the stock market and traded up at some very high multiples. And as of late, as you can see here for this year or year to date, the stock has gone down almost 30% and counting. And it's been a rough ride, obviously, for the investors who perhaps bought the stock here. But as you can see here, even if you bought it here or here, you're still in the greens by far. We can also see that there's roughly 22,000 shareholders holding the stock at my broker Avanza. So it's one of the more commonly owned stocks out there to hold. For this overview, I've added a few KPIs which I think are important, such as the net sales here in blue. So all the blue ones here are the net sales. And also then the orange, we have the earnings per share across this period. And then we can also see the green, which is the gross margin here that sits at 49.5% here in the most recent quarter, and then the profit margin here at 11.3% in the most recent quarter. And we can also see here that we had a record here in profit margins. You can't see it from your side, but from my side, they had a profit margin here at 15.9% in the latest quarter in 2022, but it has almost then been reduced by 4.6 percentage points here compared to this period here. And what I can also see here when I look at these figures, we can see that the Q4 periods are very strong for this company, and it's probably because they're selling a lot of Christmas gifts. Not just clothes, but maybe, glassware or some other things, items which their customers like to buy for gifts. So we can see that it's kind of sloppy across the year. So it's not, it's not a trend line that goes up for every quarter, but rather they probably have some increased sales here during the Christmas periods, I would assume. And that's why, especially for the Q4 earnings, the net sales and the profits are going up during those periods much more than compared to the other periods. On this overview, we can see the cash flow margin for New Wave. And as you can see, it is a pretty volatile picture here with some years and most recent quarters here and most recent year here, we can see that it's negative 11.4%. And then we've had some off years here where the free cash flow margin has been pretty high at as high as almost 90% here, which is actually very, very good. And also here at 16%, which is also good. But going back a few years, we can see that it's been pretty sloppy going back and forth. And management has not been able to produce a steady free cash margin here, which obviously makes it quite difficult for investors, to make any assessments going forward, whether what multiples this company should trade for. And that means that the stock price will most likely be quite volatile as well, going up and down, because if they post something like this, like a minus 0.71%, and then the next year they post a 19%, I mean, it's just the stock is going to go up and down as a consequence, because investors can't make any sense out of this. Looking at the free cash flow in kroners per share, this paints pretty much the same picture as it should. The only difference would be maybe if they had some new direct share issue or something like this that could have changed this picture, but it looks pretty much the same as the other one, so not much different. Now looking at the cash flow overview for the New Wave company, and this is for the trailing 12 months, mind you, and we can see that the management has had a tough time to produce positive cash flows. And as you can see here on the side here, on the right side, it is not very often you see negative cash flows across the board for a longer period. But it is what it is. So just as an explanation, the blue one here is the cash from operations. So all the blue ones here, all the blue staples here, and then you have the investing side of the business, which are the orange side, and as you can see here, as of late they have been increasing, and then the green one, which is the free cash flows then for the different periods. So trailing 12 months, mind you. We can see also for some reason then it's quite correlated actually with the cash flow margins as well. I mean, if you have very negative cash flow margins, I mean, obviously it will be negative in the cash flows here in kroners as well. And this is what we're seeing here. Hopefully we'll see some remarks from the CEO why there are so negative, because it's not often the case that you see that the cash flows are negative for such a long period here, especially during Q4. I haven't read a report or anything, but I remember the Q4 report were quite strong. So yeah, they're doing something. The net income is just, not good here. All right, looking at the net debt to cash from operations, we can see here that management had done a good job historically speaking. Here we can see in 2021, almost across the board, the cash flow from operations did cover the net debt quite well, or more than well actually. So the debt situation was not a problem, I would say, at all during this period. But here, for some reason, we can see that the trend is broken, where the net debt is actually higher than the cash from operations. The net debt has been going away here. I think they did make some acquisitions happening at some point here, somewhere in time. So it could be the case that maybe they financed that acquisition with debt, which is, it's not uncommon. Most companies do, but that could give away an explanation why the net debt is going up so fast here. But we can also see the trend here that cash from operations are very weak here, and even negative for some reason. And this is of course going to be a challenge here for management, that they have to drive the cash flows here. The cash from operations has to be positive. So they have a lot of challenges here, I would say, to bring that up and to reduce the gap here between the net debt and the cash from operations, because it could be that many investors get worried when they see that the gaps are increasing this much, especially when the company comes from a period such as this. But I would assume that there is some acquisition going on here, and that's why the net debt has gone up so fast. Here we can see the net debt to EBITDA, and in my opinion, 1.4 in itself is not alarming. We can see that the company actually has come from levels which are much higher than this. So this level today at 1.4, that's not so bad. And especially if we compare it to some peers here, or not especially, but we have Phoenix Outdoor, which is also kind of in line with New Wave Group, and we can also see Hennes & Mauritz, which sits at 1.5 times net debt to EBITDA. So it trades where it currently has multiples, which is very comparable to its peers. So nothing really that stands out. And but I want to reiterate that the current net to debt EBITDA is not alarming right now. But if the debt is increasing, as we saw in the previous picture, and if the cash flows and earnings are weakening, then this number could go up as a consequence, but still 1.4, that's a low level in my book. Now in this picture, we can see the short situation with this company, and we can see here that the stock is shorted on the right-hand side here, and as much as almost 4.8% of the total float is being shorted right now, and it is quite high, I would say, but it's certainly not the lowest either or highest. Comparing it to SBB again, we see that SBB sits at 17% of the total float being shorted, YMAB at 15%, and Hexatronic then at shy 10%. So it is being shorted. I think it ranks somewhere between 21 and 40 out of the most shorted stocks in Sweden. So it's certainly not, it doesn't take any top positions, but it is shorted. So some obviously has some other ideas about where this company is going in the future, and it's up to investors whether or not they think this is a high number. Obviously, it's a very subjective number, but it's certainly not zero at least. So, yeah. Now, looking at the CEO remarks here, we can see that the CEO believes that the company's is taking a market share here in a ever so weaker market environment. Yeah, I mean, the operating margins have been punished, as he's saying here. So in this point here, he's saying that they went from 17.4% operating margins down to 15.8. So it is, I would say, it is in line with his own target at 15%, and it's still actually a little bit higher, but you know, investors always get used to the higher numbers and they expect the higher numbers, so it's always tough for management when they produce such high margins and then they have to go back to the more normal ones. The CEO is also optimistic here, as we can see on the future. He is, however, saying that in the short term they're going to have some, challenging markets, but he's confident that they're going to make it. They have good brands and so on. He's also saying here that the market will be challenging the next 2 to 3 quarters, but he believes that it could present an opportunity here for New Wave Group to conquer some more market share here. Continuing here with the CEO remark, it just didn't fit on the other page here, but we can see here that the cash flow, he's making some remarks here, and they're working hard to increase the cash flows, and he's saying that it's already showing some results, and he also forecasts that his work in process will have a positive effect in the second half of the year. So please do remember that the report and earnings that we're looking at right now are from the most recent quarter, which is the second quarter of 2023. So here he talks about the Q3 and Q4 of 2023. The CEO has also mentioned during interviews that he's also kind of against having too low stock levels, and do remember that stock levels in itself ties a lot of capital, and it hurts the cash flow in the short run if you tie up too much capital in, for example, your warehouses. You have a lot of stock of t-shirts, you have a lot of stock of glassware or any other clothes, maybe you have some shoes or whatever. But what he's saying to protect this, high stock levels is he's saying that he wants to have higher stock levels because he believes that he can offer the customers a faster, service, and also, faster deliveries. Whereas maybe the competitors have lower stock levels, and I would assume then that he can offer, faster delivery times, which could be opportunistic, for a New Wave to take market share. So, it is tough. On one way, investors always want to see the cash flows, but this is an experienced CEO. He's run this business, I think, since the 90s or something like this. So when he says that he's confident in the stock levels, I think the investors should listen. But it is always tough because investors such as myself, we go in and look at the numbers, and when we see, the cash flows are being low, then many investors will just stop there. They won't, read anything more. they will just think that the company is uninterested and move on. And I think it's those kind of investors that this company would lose if they don't improve the cash flows. But it is what it is. Now, this was it for this video about New Wave in the second quarter. I think it's going to be quite interesting to see what's going to happen here in the Q3 and Q4 report. I don't currently own this company myself, so just sitting on the sideline here, it's just interesting to see what's happening, because this CEO, as you see here in the picture, Torsten Jansson, he's quite a figure. He's done very well for himself and many other shareholders owning this company, and he just seemed like a humble and good CEO with good characters here. So it's just one of those companies that I don't hold myself. I know that some other holding companies own this stock, so I'm just listening to their remarks, and I'm listening obviously to the CEO's remark, and I'm just enjoying the show basically from the sideline. Anyways, if you liked the video, please like and subscribe for more content. Thank you very much for listening. Bye bye.